stocks, crypto, credit, moves. Good afternoon, YouTube. Back for another video. Today I'll start my introduction in discussing the stock market from my point of view. I'm not a financial advisor. I'm just here to share what I look for in the stock market, how I view it from my opinion. Everybody's going to have a different mindset on the stock market, so I'm just here to share mine. From the beginning, I just look at the stock market uh, as more of a long-term investment. There's other options to make cash in the short term, but the stock market, in my opinion, is more of a long-term investment because there's so many different factors that can influence the stock market. Just like currently we have inflation, that's what is at an all-time high. Also, too, we're at war, so in my opinion, it's tougher to make short-term moves in the stock market than it may be like in crypto or other investments, which they're long term too. But in my opinion, the stock market is an even longer term investment because there's so many different parameters that can change your stock positions, especially if you're doing more for a short term play. Some investors they like swing trading, some like options, and all of those strategies have a point of interest in the market where it makes sense. So I'll just go into kind of like what I look for in the stock market and the websites that I use to actually look for discounted stocks or just what I look for before I make a selection. So the first website that I'm going to share is barchart.com. And this is pretty much a website that gives you a lot of information about the indexes. It gives you information currently of what's going on in the stock market. So as we can see here, it says U.S. stocks fall as wage wars in Ukraine, wage on Ukraine. So that's what I mean by the stock market. It's nothing wrong with buying stocks for the long haul because there's so many different variables that can change it. So now the stock market is on a decline because of war and inflation. So let's just look at a couple companies. Uh, let's start with one that everybody probably knows about. Let's look at Apple. And bar chart gives a lot of information about stocks. So it's just showing here the day low, the day high. This was actually on Friday. And also here, post market, annual sales, market capitalization, 60-month beta. So it's nice to get a perspective of how the market movers are rating the stock. Of course, they're not always right, but they have an influence to move a stock positively or negatively. So you have to take into account uh, what the market movers are saying about a particular stock. Let's look at analyst ratings. They pretty much are saying that the low target for Apple is $145 a share, mean 191 and high. So a lot of people they ask me where do you get in at? at what point do you buy? Um, if you can get in it, if you can get a stock at its a low target, or currently at a 52-week low, that's it. This is at least a time to actually think about buying a stock, because throughout the course of a year, all stocks are going to have high points and low points. So I think the biggest issue with a lot of investors, they get to a point where they start to feel like they're going to FOMO, which is fear of missing out. So they'll make a decision and buy a stock at its high, even though there's never really a rush to get into a stock, because you really should just get a long term mindset. And what I mean by that, 3 to 5 years. And honestly, the longer you can hold a stock, the better chance you actually have of being profitable. So the average analyst rating, they're pretty much saying over the last 3 months, is a 4.67 buy, and the highest, which is a strong buy, is a 5. So the analysts are agreeing that currently Apple is a 4 out of 5 buy, and this is just their opinion. Let's take a look at another stock that I've been holding for a while. It's actually in the biotech, which their stocks are a lot more volatile. But the reason why I like them is because the upside is a lot greater than some of your blue chip stocks, in my opinion. So this is a stock. It's a cancer company. So they actually they research different. They research cancer. They research cancer for different cures. So it's GRTX. We go to. It's a valuable website. It gives out a lot of information about the stock. So everything has kind of been in a downturn right now. As you can see, even if you were to enter GRTX at its current price, you see that the low target is $4. So even if you bought right now at 221 and you held to $4, I mean that's almost 100% return. And if you get to the mean, which is 1225, you're at about a 600% return. And these returns are expected over 12 months. So no one knows the day or the time when the market movers are going to decide they want to move the market up. And that's another thing too. As retail investors, we have to get ourselves in the mindset of we're small people. There's a lot of us, but we don't move the market, in my opinion. Uh, we just have to kind of stay in the market and play more of a long term strategy, and just buy some of these companies and hold. In my opinion, uh, let's say like if this stock in the pre market tomorrow it opened up and it's $2 or $3 above where it's currently trading. What I notice is a lot of times those prices don't tend to hold. So let's say if GRTX we opened up tomorrow and it was 521, and the previous day it was 221. Uh, a lot of times that's when I actually will sell that stock and just take my profits, because a lot of times the gains are not sustainable. So that's not a healthy growth. So that's why a lot of times people they don't like biotech stocks or stocks that are very volatile, because they'll run up and they'll fall very fast. So I mean, some people they like the Apples and the Googles because the companies are more stable and they grow at a healthier rate. So yeah, that's just my opinion on when to sell. If you have something that's in your portfolio that's giving you gradual gains, that's more of a stock that I would consider as a long hold. If something just out the blue gets some news and it rips up and it runs up $3, $4, you up 120%. A lot of times I go ahead and I take my profits and I sell, because usually shortly thereafter there's a sell-off. Let's go to another website. Bar chart is a good, and I'll put these two in the description. Let's take a look at Market Beat. They do some of the same things. They just give out information about the stock. Another area that I like to look at when I'm analyzing stocks, I like to look at institutional ownership. That section is actually not opening. There it is. So this pretty much tells you how the institutional is the house money. So 70% of the shares is owned by institutional investors. So that's definitely something that they believe in. And a lot of times they're just kind of like they're dropping crumbs as to what companies they like. So a lot of times the institutional investor ownership, the higher it is, the more stable it is, because the banks and the hedge funds managers have their money betted on a particular stock. So those usually are the ones that are plays that are more stable, and it's a long-term growth stock. So that's pretty much what I want to cover in this video. I'll continue to be in the future. I'll go in more details as to what I look, but I just wanted to get started because I hadn't covered anything related to the stock market on this channel. But I'm going to stop here for today. I'd love to have you as a subscriber. Until next time, signing off.